Housing prices were crazy in 2021. Now there's tons of people that wanted to buy a house in 2021 that didn't get to. We're gonna use data from a few sources to go over what happened in 2021, what that will mean in 2022 for the housing market, and what that will mean for you as a beginner real estate investor or first-time home buyer. In my comment section on TikTok, I hear complaints all the time about people that are just gonna wait till the housing market crashes before they buy. Or something like, don't buy a house now, just wait till the crash comes. I was one of those people. Let's rewind back to November 2020. At this point, the housing market was gaining some steam, but honestly, it was nowhere near the shit show it is now. I was just about to move to Austin, so I came here to start looking at a few houses. I was still working in New York City, remote, as a software engineer, making a good salary, so I could qualify for homes here that were $300K, no problem. I knew that I was gonna get rid of my job soon, so I wanted to use my FHA while I still could. This way I could live in it for a year and rent it out to other people. An FHA loan is a loan for first-time home buyers that allows them to get it with a low credit score and a low down payment of 3.5%. What I was looking for was a single-family home. This way I could live there and have tons of space, unlike my New York City box. Not only that, but I had been coming back and forth between Austin and New York since 2018, and I had seen tons of growth happening over the years. I saw home prices constantly go up. So I started looking at houses with a real estate agent that I came into contact with earlier in 2020. Right off the bat, there weren't that many homes on the market, so I had to make offers on the ones that were on the market, and I had to act quick. A few houses came on, I went to go see them, I put offers in. But I started getting outbid. The first house actually was $265 asking price, was in a great location where I wanted to be, and I offered $275, and I ended up losing out to a bid that was $280. As an investor, I hated the idea of having to overbid on a property because that's like what you don't do. It makes you feel like you're not getting a good deal. So I had to realize that in order for me to compete with the small number of homes that were still available, I had to overbid. But I still needed to do it smart because you don't want to overbid too much and then have the housing market crash and then have a house that's worth less than what your mortgage is. 2 months went by, I kept making offers, each one slightly stronger than the last one, and I just got overbid on everything. I would put in offers right away, like literally same day, within a couple hours of them coming out, and still get overbid. It got to the point where it was now March 2021, like 10 months ago. I saw this perfect house in a good area, right where I wanted to live, and it would have worked perfectly for me as an investment and for me to live in. The property was asking $300K. I went there, open house on that day, and I put an offer in for $340. I got outbid at $380. After that, I just gave up. I said, I'm just gonna wait till everything crashes because things are freaking crazy right now. So I waited the rest of 2021. I was hoping that the housing market would crash given all these talks of mortgage forbearances, evictions pending, and foreclosures. But actually nothing changed, which was trash. Well, actually something did change. The prices just kept going up. Since 2018, I was telling myself that I was gonna wait to buy a house in Austin because the home prices were just way too high. But honestly, every time I said that, I've been wrong. And not just in Austin, throughout the country. Actually, since 2016, I've been waiting for the housing market to crash, back when I was living in New York City. But here we are, 6 years later, and home prices are at a new record high. So I've mustered up the courage to go look at houses again, and I went to go see one a few weeks ago that was 2 blocks away from the house I saw in March 2021. It was asking $400,000. $100,000 more than the same house 2 blocks away less than a year ago. So I decided to wait. This whole time I kept deciding to wait. And if you're watching this video and you decided to wait all of 2021, let me give you some data on what we can expect over the next year and then what you can do with that data. First, let's break down why we're in this situation to begin with. First off, we have record low interest rates. The interest rate in 1981 was 16.63%. Since then, it has steadily dropped to 3.11%. That is like over a 13% difference. The reason why the government did this is so they can lower interest rates so people can borrow more money, which would stimulate the economy. If your interest rate is lower, then more people can compete over the same house. Let's assume that you buy a $300,000 house with 3.5% down. And in one scenario, you buy it with a 3% interest rate. In the other scenario, you buy it with a 5% interest rate. Your monthly payment with 3% interest is $1,624 per month. But that same $300,000 house with a 5% interest rate, only 2 points higher, has a monthly payment of $1,958 per month. That means you have to make on average an extra $20K more, give or take, just to be able to afford the same house at a 5% interest rate versus a 3% interest rate. So if people can afford the same house, that will increase the demand for buying. And one of the reasons why we have such a high demand for housing is because the interest rates were decided to keep low because of the pandemic. So this way we could keep the economy going even though things were slowing down. The second factor is the number of homes being built. Every decade from 1950 to 2009, on average, we built 11.855 million homes per decade. But for some reason between 2010 and 2019, we've only built 6.9 million homes. So new builds were cut in half, and I'm assuming this was because of the 2008 recession where home prices dropped significantly, so it wasn't worth it for builders to build. But here's the difference. The population growth hasn't changed that much compared to the other decades. From 1950 to 2009, we gained 148 million people here in the US. It averages out to be 24.6 million people per decade. From 2010 to 2019, we gained 20 million people. That's only 20% less population growth than the decades before, but we built almost 50% less homes than the decade before. That means we have more people coming here and being born than houses being built, which means those people are still going to want a house, so the demand for housing goes up, while at the same time the supply for housing goes down. The next factor we have is money printing going on with the government. The government printed so much money these past few years because of the pandemic. See, there's a fixed amount of land that the US has. Let's say you try to buy a piece of land and it's worth X dollars, but if the government keeps making more dollars, then there's a high supply of those dollars. When there's a high supply of anything in economics, the demand usually drops, which means the value of each of those dollars drop. And so because there's a fixed amount of land and the value of the dollar dropped, that same land is now worth more dollars because the value of each dollar dropped. That's basically what inflation is. And because everyone has been terrified of the inflation that is happening and will happen with all the money that has been printed over the last few years, they've been buying houses like crazy in 2021 because houses are hedged against inflation. The houses are an asset that will go up in value while inflation ruins the dollar. Combine that with the fact that interest rates are super low while home prices are about to skyrocket, that allows people to get equity in their home nearly instantly without doing anything. And the last factor I would say is purely emotional. The buying really started getting terrible around Q1 and Q2 of 2021. That's when everyone started overbidding. They started making cash offers right away as soon as the property hit the market. This drove more and more people to become even more crazy about buying houses, which forced more people to bid higher, act quicker, add more cash to their down payment. It's just like a spiraling effect that kept happening because of how crazy people were to try to buy a house. And so given this data, let's look ahead to 2022 and come up with some predictions. This way you can get a good idea of what's going on. The interest rates are still really, really low. Supply is still really, really low. And demand is still really high, although it has dropped a bit since its peak. Freddie Mac, which is the Federal Home Loan Mortgage Corporation, has made their predictions based on what they're seeing. They believe that there'll be just as many home sales this year as there were last year because the demand is still really high. But they do see the price growth of all of the homes slowing down to 16.2%. from the 15.9% we had last year. To be clear, this doesn't mean the home prices will drop. They'll still rise. They just won't rise nearly as much as they did in 2021. And to put this into perspective, 6.2% is double what the average yearly rate is for homes going up, which is usually 3%. The Fed has already come out and said that they're going to try to increase interest rates to try to battle inflation. So if interest rates go down, the demand will also go down, hopefully. Fingers crossed. When interest rates go up, that mortgage becomes more expensive, which is going to cut off a large portion of the population that is just on the edge of being able to afford a home in their area. So I still think there'll be tons of demand, but the demand will definitely slow down if the interest rates go up. Instead of houses sitting only for a couple days, you're going to start seeing them to sit for a couple weeks. By sit, I mean being on the market. The main problem that I see that's causing all of this is the fact that we're not building homes fast enough and keeping up with the population. Last year has been hard with inflation increasing prices and supply chain making it super hard to get all the materials you need to buy a house, and all these people on unemployment that weren't working. This all made it really hard for builders to keep building. Even though I think the government will raise interest rates, the thing that I think will happen is the government will try to do something to appease all of these people that are looking for affordable housing fixes. So people are going to complain that the houses are not that affordable, and what's going to happen is the government's going to do something to fix that. But usually when the government does something, they don't really do it right. One thing that I've heard other people talking about and I've thought about myself is that they may increase the limit on a mortgage from 30 years to 40 years. That means you can decrease the amount of money you'll pay monthly, which will then allow more people to buy houses again, which only makes the demand go back up and doesn't fix the freaking problem. They just did something similar by announcing that the FHA loan usually has limits, but they increased the limit of the FHA loan, which allowed more people to be able to get houses with the FHA loan, which just increased the demand. It did nothing good for the first-time buyer. What I think they need to do instead is to fix the supply issue, which is not having enough houses. So we need to find a way to incentivize builders to build homes and engineers to find ways to build homes faster and better. This is the main problem. We don't have enough houses. If we had more houses in the right locations, then there'd be a higher supply. If there's a higher supply, it can keep up with the crazy demand. And then once everyone gets a house, the market can cool down. So the government should incentivize builders with tax breaks or subsidizing their costs for building the house, for using different types of materials, that kind of thing, in order to incentivize them to build more homes. But do I think the government will do that? No. Like I said, I think they're going to do something instead that's going to make it seem like they're fixing the affordability of the house, which is instead going to increase the demand. Now, what should you do given all this information? If you're an investor that flips houses, I would be weary about flipping houses anything later than the beginning half of this year. I think the beginning of the year will be really strong, and towards the end of the year, things are going to slow down because the price growth would have been so high that most people can't afford anything. And if you're a flipper, you don't want to have any issues selling your property. Now, if you're a buy and hold investor and you live in one of these expensive markets where home prices are too high and rent prices are too low, what I recommend you do instead is to find a cheap area with low competition. You want to find an area with lower competition, this so you can actually make offers on houses that will cash flow for you, which means make profit, without dealing like the super high competition in the areas like Austin and Phoenix. Now, if you're looking to buy a house to live in, it's a little bit different. I recommend that you buy if you're planning on staying there for 10 plus years, because if you are, you'll end up being able to ride out any crash that ends up happening. Now, if you're planning on staying there less than 10 years, I would definitely not keep the property and I would just rent it out. Because what can happen is you may have to overbid for this property, and if you overbid and then you try to sell a few years later and the market crashes, you may end up losing a lot of money yourself. In the end, honestly, I don't think we'll get out of this crappy situation without the housing market changing the real issue, which is the supply. We need to build homes faster and cheaper than we are right now. This way more people can afford homes, and this way we can keep home prices low. And I'm saying this as an investor because investors don't want home prices to be really high. Then you can't cash flow on anything. Now, if you want to learn how to buy your first rental property step by step, click the video on screen here where I break down every single detail you need to know to get started. I'll see you over there.